There's a question I get all the time. Should I invest in real estate or should I just stick with stocks? And usually, people are hoping I'll give them a clean answer. Like, this one is clearly better. But the truth is, the real answer only became clear to me after I owned both. Not from YouTube, not from books, not from Reddit debates, but from watching my own money behave in real life. So today, I want to walk you through how real estate and stocks actually compare. Not in theory, not in best case scenarios, but based off of what I've seen inside my own portfolio. And what surprised me, what stressed me out, and what I'd do differently if I were starting over today. Let me start with real estate, because this is where a lot of people get hooked. On paper, real estate looks incredible. You buy a property with maybe 20% down, you use leverage, tenants pay for the mortgage, your value goes up, you get cash flow, appreciation, tax benefits, so on and so forth. It feels like you're almost cheating the system. And I'll be honest, when I bought my first property, I felt smart. I checked the Zillow value constantly. I ran spreadsheets, and I also told myself, this is how real wealth is built. But here's the part nobody really emphasizes. Real estate is not passive at all. Even when everything is going well, it still takes mental bandwidth. You're thinking about repairs, tenants, insurance, property taxes, local laws, vacancies, big unexpected expenses. And the returns, they come with friction. So here's an example. Cash flow sounds great until you realize how much of it gets eaten up by maintenance, capital expenditures, turnover, and time. Real estate can be fantastic, but it demands your attention in a way stocks never do. And here's something I didn't understand until I personally lived it. With real estate, your money is loud. When something breaks, you hear about it. When a tenant is late, you feel it. And when taxes jump, it hits your cash flow instantly. And psychologically, that matters. I found myself checking messages, thinking about the property during unrelated parts of my day, and also running scenario in my head. Even when the numbers were fine, the mental overhead was real. Now contrast that with stocks. Stocks don't text you, they don't call you at 2 a.m. They also don't need a new roof. You can own a diversified portfolio of business across the entire world and go weeks without even thinking about it. That difference alone changed how I think about returns. Because returns aren't just financial, they're emotional and cognitive too. For a long time, stocks felt boring to me. You invest, you wait, you don't feel productive. There's no leverage story to tell, no physical asset to point at, and no sense of control. But when I zoomed out, I looked at my portfolio over the years, through good markets and the bad ones, and here's what surprised me. My stock investments required almost no time, it scaled effortlessly, were extremely liquid, and quietly compounded in the background. No decisions about repairs, no negotiations, no phone calls, just ownership in real businesses, doing what businesses do. And the longer I held them, the more powerful that simplicity became. I didn't have to be right every year. I just had to stay invested. Leverage is where real estate really shines and where it can quietly hurt you. Yes, leverage magnifies gains, but it also magnifies stress, risk, your downside. And when markets are good, leverage feels genius. But when something goes wrong, either it be vacancies, repairs, interest rates, market downturns, leverage doesn't care about your confidence. With stocks, leverage is optional. With real estate, it's already baked in. And personally, I realized something about myself. I don't love forced risk. I like flexibility. I like margin for error. I like knowing I can adapt without everything being tied to one asset. That realization pushed me more towards stock over time. Not because real estate is bad, but because I value simplicity and resilience more than max returns. Here's an advantage of stocks that rarely gets talked about. They're modular. You can invest $100. You can invest $1,000. You can rebalance instantly. You can diversify across countries, industries, and even business models. Real estate is chunky. Every decision is big. Every mistake is expensive, and every adjustment takes time. On the other hand, stocks let you learn gradually, make small mistakes, and adjust without friction. And over time, that adaptability compounds just as much as money does. So after owning both, here's the honest conclusion I landed on. There's no universally better investment. There's only better for your personality, better for your lifestyle, and better for your risk tolerance. Real estate rewards involvement, patience, and operational skill. On the other hand, stocks reward consistency, restraint, and long-term thinking. In my own portfolio, I still value real estate, but I no longer romanticize it. And I've leaned more heavily into stocks. Not because they're exciting, but because they let me focus my time and energy on things I actually enjoy. My money works quietly in the background, instead of demanding attention. If I were starting from scratch today, knowing what I know now, I would start with stocks, build a strong, boring, diversified foundation, develop the habit of investing consistently, Learn how markets actually behave over time, and only then consider real estate intentionally. And hear me on this. Not because it's trendy, not because someone said it's the only path to wealth, but because it fits my life, my skills, and also my temperament. So if you're stuck trying to choose between real estate and stocks, don't ask which one is better. Ask yourself this instead. How involved do I want to be? Or how much stress can I tolerate? And what kind of life am I trying to build outside my investments? Because the goal here isn't to win at investing. It's to build a life where your money supports you instead of the other way around. So if this was helpful, I've got another video where I break down how I think about building a simple, long-term portfolio without overcomplicating things. Go check it out. And thanks for watching, and I'll see you on the next one.